Predicting future regulatory developments for Bitcoin is challenging due to the evolving nature of Bitcoin regulation and the diversity of approaches taken by different countries and regulatory authorities. However, based on current trends and emerging issues, several regulatory predictions for Bitcoin can be considered. 1. Increased regulatory scrutiny. As Bitcoin continues to gain mainstream adoption and attract significant investment, regulatory scrutiny is likely to intensify. Governments and regulatory authorities may seek to implement stricter regulations to address concerns about investor protection, financial stability, and illicit activities such as money laundering, fraud, and terrorism financing. 2. Enhanced AML/KYC requirements. Regulatory authorities are expected to impose more stringent anti-money laundering, AML, and Know Your Customer, KYC requirements on Bitcoin exchanges, wallet providers, and other virtual asset service providers, VASPs. This may include mandatory AML/KYC verification for all users, transaction monitoring, and reporting obligations to detect and prevent financial crimes. 3. Licensing and registration. Many countries are likely to introduce licensing or registration requirements for Bitcoin businesses, including exchanges, wallet providers, and custodial services. Licensing regimes may involve compliance with specific regulatory standards, capital requirements, cybersecurity measures, and ongoing supervision by regulatory authorities to ensure compliance with AML/KYC and consumer protection regulations. 4. Regulatory frameworks for stablecoins. The rise of stablecoins, which are cryptocurrencies pegged to fiat currencies or other assets, has raised concerns about regulatory oversight, monetary policy implications, and systemic risks. Regulatory authorities may develop specific frameworks to regulate stablecoins, including issuer licensing, reserve requirements, redemption mechanisms, and transparency standards to address regulatory concerns and ensure stability and consumer protection. 5. Central bank digital currencies, CBDCs. The development and issuance of central bank digital currencies, CBDCs, by governments and central banks could impact the regulatory landscape for Bitcoin and other cryptocurrencies. CBDCs may compete with private cryptocurrencies, raise questions about monetary sovereignty and financial stability, and influence regulatory approaches to digital currencies, including taxation, legal tender status, and cross-border payments. 6. International cooperation and standards. Given the global nature of Bitcoin and the cross-border implications of regulatory actions, international cooperation and coordination among regulatory authorities are essential. Regulatory harmonization efforts, such as the Financial Action Task Force, FATF recommendations for virtual assets, may lead to standardized regulatory frameworks and enhanced collaboration to address regulatory challenges and promote regulatory consistency across jurisdictions. 7. Innovation and regulatory sandboxes. Regulatory authorities may establish innovation hubs or regulatory sandboxes to foster innovation in the Bitcoin space while ensuring compliance with regulatory requirements. Regulatory sandboxes allow companies to test new products and services in a controlled environment, providing regulatory relief and guidance while promoting responsible innovation and consumer protection. Overall, the future regulatory landscape for Bitcoin is likely to be shaped by a combination of technological advancements, market developments, geopolitical factors, and regulatory responses aimed at balancing innovation with investor protection, financial stability, and regulatory compliance. While regulatory uncertainty and challenges may persist, proactive engagement with regulators, industry stakeholders, and policymakers can help address concerns and shape the future of Bitcoin regulation in a constructive manner.